GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that. That's why it's the top position in my portfolio and also Dr. Mike Berry's portfolio. But based on prevailing sentiment, the market, and popular culture, many think it's a foolish investment. But everyone's wrong. It's like the Big Short again, or more like the Big Short squeeze this time, right? Anyway, let me show you what we're seeing. Still in 2020, GameStop maintains a healthy market share within the gaming industry. It's the only major brick-and-mortar retailer dedicated to gaming, and a recent survey indicated that over 25% of people buy their new games at GameStop, and 40% of people buy their used games there. Its reboot plan is well underway, and it's comprised of two main components. The first is optimizing the legacy business by right-sizing costs and improving the omnichannel experience. This will boost near-term free cash flow, which in turn can be used to finance the second, more important component, reinventing itself as a premier gaming hub within the thriving $150 billion gaming industry. GameStop's modernizing stores, partnering with vendors, and offering experiential products. This is the potential upside, and it's enormous. They've been testing 4 stores in Tulsa, Oklahoma that focus on live experiential concepts. Clearly, the new management team is laser focused on gaming, and Frank Hamlin, the chief customer officer, wants GameStop to become the cultural center for gaming. They also teamed up with the Dallas Cowboys with the GameStop Performance Center. This space was uniquely designed to be the premier facility for the next evolution of esports. Imagine a handful of these venues around the world where gamers could come together to train, perform, and just hang out. So could this new management team actually pull off the transformation? It's possible. They've been doing mostly the right things over the past year. Plus they have Michael Berry's support. You really gonna question the guy who gets his hair cut at Supercuts and doesn't wear shoes? Shit, I'm not. But what about the death of physical discs, you say? Let me tell you something. People have been saying this shit for a decade. And do you know what Microsoft had to say about this at the start of this console cycle? Millions of people still want discs. Period. It's a big reason these new consoles have disk drives, and that's why physical will remain a part of Microsoft's future. To be sure, the shift to digital is happening, just not as quickly as many people think. It's true the pandemic may have accelerated some long-term trends, but as stores are opening back up, people are buying physical discs again. And a quick reminder at this point, GameStop sells other items besides physical discs. This helps drive traffic and will allow it to offer exclusive console bundles to its 60 million rewards members this fall. That said, the used games business has driven the lion's share of historical free cash flow, so let's focus there. We know how Microsoft feels about physical, now let's check in on Nintendo. In their latest pandemic-ridden quarter, a whopping 44% of game sales were still physical. And this is huge for GameStop because the Switch has surged in popularity this year, and I assume its used games have as well. And in particular, Animal Crossing New Horizons was 50% physical. And after having sold over 20 million units in just a few months, that's now one of the top-selling video games of all time. So how about Sony? During the same quarter, 26% of full game sales were still physical. Now the year-over-year decline is certainly notable, but two things here. First, as stores reopen and new consoles roll out, this figure will likely bounce and stabilize for a few years. And second, even just a 26% physical share is still meaningful, considering GameStop generated over $1 billion in free cash flow in the early years of the last cycle. And also, it's important to remember, this is not a zero-sum game. From April to June, video game spending was up 30% year over year. That's a massive benefit to physical, digital, and the whole damn industry. And that's why Sony and Nintendo have been boosting their expected output this year. More consoles and a much larger video game lineup than the last cycle means more software and accessory sales as well. And this is a boon to a specialized gaming retailer like GameStop, who will also benefit as the go-to destination for folks trading in old consoles and games as part of their upgrade to the new consoles. Now, obviously, this thesis is based largely on the fundamentals, but shit, GameStop's chart is looking increasingly compelling. And this matters because if the price breaks out, technical analysts who don't even give a shit about the fundamentals will start piling on. To add to this, GameStop is by far the most heavily shorted company in the market, with short interest of around 100% of the float. 100%! Can you believe that shit? The combination of positive fundamental developments, a potentially massively bullish chart, and an exorbitant short interest suggests to me that an upward move could be explosive. Maybe. What the hell do we know?